Hello and welcome to the analysis of a DXY dollar index. My name is Vic. I'm the founder of Ikensa Capital Management. Thanks for joining me here. Dollar started to fall down. It has taken a little correction, but is it ready for the next move? Is it going to go back again to the upside, or have we seen the end of the bullishness? Right. Let's find out. Okay, so what we are going to do is actually start on higher time frame. So I'm gonna show you what 6 months time frame looks like. Now on 6 months time frame, right, this is the current candle, which means that towards the last couple of months which are left, we are in November and December, so 2 months left until this candle closes, and we get the result of this candle. Now this candle is looks like it is going to complete as either doji, or it will try to become a bearish candle. The reason being this huge rejection that we have seen. Okay. um, if we talk about higher time frame, not just focus on what is going to happen right now, but if we talk about the higher time frame, then what we can see that we have this W pattern, and because of that the market is falling down. Now this candle can actually turn into a bearish candle. It can fall even further down, but what we see is what we trade. So remember, we have this middle structure here. So the dollar can actually fall. Even if it falls, it can come down to this middle structure here, which is around 104 or so, and then bounce back up. And that can happen in in coming months, coming weeks and months. So that is still a possibility. Another possibility that you might be able to spot is that if the dollar continues to rise up, then we will have this structure here at the top, which is 120. I have already given you 127 as one of the targets here. But even if 127 crosses, then we will have a bigger W pattern, which will bring the market into 144, 145 level or so. That is still a possibility. I have not covered that possibility before in any of the previous analysis, but now it can be a possibility if the market starts to respect this level, or one of the levels somewhere around here, in the middle of it, around 100 or so. Then it can still push the price back up into this previous structure and beyond that to 144. And we also have a gap available around here as well. And the dollar index, as I've seen, never leaves any kinds of gap open. So we don't know when this is going to happen, or if it is going to happen, but there is a possibility, there is a case for that as well. So this is what we have on higher time frame. So the market has started to take a little bit of correction here, and I've given you another possibility which can happen. Now let's go to 3 months time frame here. On 3 months time frame, what we can see is this: the market has started to take a little bit of correction here, and this can this, so far this candle is not a very hugely bearish candle, because what you need to do is compare the current candle with the previous structure. All of this was hugely bullish, and we have got just one little bearish candle here. That means, although the market has started to correct a little bit, it is not heavily bearish as of now. You see, the market has gone up, which is this move, and then we have a little bit of correction here. Now, what happens after a correction? There are two only scenarios. One, the market tries to go back into the trend direction, or it fails to just get a support anywhere, and it continues to fall towards the end of this correction and then falls into a reversal. But for that to happen, it will have to go through some of those levels, and that is why I am saying that this level here, the mid level here, or this level here, can be very, very important. So we need to watch out for that. Okay, so this is what we have on 3 months time frame. If I go to the monthly time frame, which is like this, you will notice that what we have is actually a kind of pattern building. So we have the market going up, then we had a rejection, and then we have a huge rejection which has kind of engulfed previous two candles as well. Now this usually is kind of sign. It looks like a bearish one, but it usually gives us a sign that there could be a bullish candle after this. So we can expect a small or small bullish candle or a big bullish candle coming in December. That is quite a possibility. Now this bullish candle can go all the way to the previous high. That is also possible, and go beyond that, or it can just stay as a small bullish candle, and then the market will decide whether it wants to go down to this level and then rise back up. That is a possibility here. So if I go to the weekly time frame here, on weekly time frame, the market has started to push up a little bit, although I was expecting it to go slightly further down into somewhere around here. Not exactly like the previous low, but somewhere around here. But we were expecting this sort of move, and that has happened. Now let me show you what we were expecting and why we were expecting that. So if you have been following my analysis, you know that we have been following a pattern, higher time frame pattern, since we have been here, right? Sorry, since we have been here, around here, right? The market was saying, the entire media was saying that the dollar was going to die, it was going to fall down, but we were looking for bullish move, and the reason was that we had this W pattern forming, and we were in consolidation. And when the market broke out of this consolidation, it just kept on rising, and it reached our first target and the second target zone as well. So this is what we had. Now from this zone the market has started to fall. So if I go to the weekly time frame, this is how it is looking. The market has started to go down from this zone after a few tests and few ups and downs. It has made a strong move to the downside. Now what will it will try to do is actually go back up at some point in time to retest this zone. Okay, retest some of these levels in this zone, maybe slightly higher than this zone, and then it will decide whether it wants to fall down to the lower part. Okay, now this base that it is forming right now, I was expecting it to be slightly lower, because if you watch my previous analysis, this is what I gave you. So the market was here and I gave you all these levels. These are premium levels here, because I do not publish premium report on dollar index. So I give out majority of the levels here in this public analysis. So the market still has this possibility. This was a kind of wedge which got broken. The market started to fall down and it reached these two levels here, which were given 106.789 and 105.794. The market reached there, and now it has started to show some support here. I was expecting it to reach Personally, I was expecting it to reach a little lower, somewhere around here, and it can still do that. It can still fall down once more before it starts to rise. So that is still a possibility. So watch out for that. If you are going long on dollar, or if you are making any decisions on any other markets which are dependent on dollar, then you should be aware of that. Now, the next possibility after that, once the bounce is happening, the next possibility is that, as I said in the previous analysis, that we can come to this previous structure, which is going to be 108.497, 109.233, or 109.520. If it reaches one of these levels, and if it finds enough resistance, enough selling pressure, then it will form a head and shoulders pattern. And if you see, these are the same levels which will make it to go to the previous zone to retest, and that zone which used to be support, now it will try to act as a resistance. And once the market will reach the resistance, it will try to form this head and shoulders. And once you know that head and shoulders pattern has been broken, the neckline has been broken, then only we will see the market falling down to near about 100 or so. In fact, slightly lower than that. Now, going from the high point of possibility, there are several gaps left on this move. Yeah, this parabolic move is definitely over because the market has actually broken through that. There are several gaps left. The lowest gap available on dollar is at 90, and the highest gap is available around 144. So we need to look for both sides, right? If the market goes beyond the previous high, then we will start looking for bullish move. If it starts to go below this level 100 and near about 100 or so, if it starts to fall below this previous structure level, then we will start to look for bearish move, and we will look for near about 90 as ultimate monthly level target. Okay, so this is what we have here. Now let me tell you why I was looking for slightly lower move, because we have this 200 moving average, which was very very close, and I was also expecting market to come down to form an M pattern. Now M pattern is kind of complete, but it can still fall down a little bit to create a better M pattern and also touch 200 moving average here on the daily time frame. That is why this is still a possibility. If this previous low is broken, then we will look for further move down into 100, as we can already expect. So this is what we have on DXY. Now let's look at what we have got on Euro USD, as a lot of you have been asking for that as well. I've already posted Euro USD, and we have been following a plan on Euro USD for some time, and it has just been brilliant. So let me show you what we have got on there as well. Sorry. So on Euro USD, if you remember here, few months ago, in fact, actually 1.5 years ago, this was the level that I gave for short, right here, right? And this is exactly where the market has been falling down. And they were two targets. One was around here, and second was around this FCP zone, and this FCP zone was our target, right? And then I published an update in the public channel. If you can find it on TradingView. If you're not following me on social media, you are missing out, because I sometimes post stuff there on these channels, such as Twitter and TradingView. So make sure that you're following me there as well. So now the market came right into this FCP zone, and I was looking for a buy. So euro has been going up, and I've been actually pushing out indications, or kind of free analysis posts telling telling that the market was going to go up. So you see the trend line was broken here. Market came back for a retest. The lower trend line got supported, and the market has been going up. Now you see it has actually reached the 200 moving average, but DXY has not reached 200 moving average, so that is still a possibility. Ultimately, I'm looking for this target here, which is around 106257, and that is going to be weekly or monthly target. So before that, it can still fall down and then go back up. You see market runs in waves, not in straight line, so this target can still be reached. If it continues to go higher, then what we have is something like this. The target 2 will be 1.13085, then will be 102042. Okay, this target is very very important, where the entire fall started from 1.2518. Why? Because there is a huge gap available there, and the market structure and FCP analysis, all of them are saying that this can be a very good possibility if the market breaks through it, because we must cover all the eventualities. If the market breaks through this trend line, and if this M pattern fails, then it will try to form an extended M pattern, and in that case the market is going to fall to 0.933, and this FCP zone, which is around 0.91 to zero point 0.9, and then the next target is going to be approximately 0.87 or so. So these are all the levels, and these are all the things which can happen on Euro USD in coming weeks or days. So make sure that you capitalize on that, and if you find this useful, then make sure you hit the like button, subscribe to the channel, and share it with other traders and trading communities, because they will also be able to benefit from it. And I'll see you in the next one. Have a great day. Thank you for watching. Find and follow us on these social media channels.